Well, let's focus on the metal stocks. They have seen a big move, big pullback because of the higher tariffs and fears of recession. But you have the US dollar index that's cooled off, which is normally good for LME prices at least. And the domestic steel industry as well has some protection because of the safeguard duty. Parthiv Jonsah, the lead analyst, metal and mining at Anand Rathi Institutional Equities, joins us on the show. Hi, Parthiv. Good morning and good to see you in as always. Let's get a couple of basic points out of the way. What do you prefer in the metals pack, ferrous or non-ferrous?
Hi, good morning, Nigel. Thank you for having me. I actually prefer ferrous in this set of things, comparing, considering all your global uncertainties around tariff. I prefer ferrous as packed, overall packed, basically.
Got it. Okay, ferrous is preferred. Let's get a little bit deeper then into ferrous before we move to non-ferrous. From the ferrous pack, among the big names, Tata Steel, SAIL, JSPL, and JSW Steel. What do you like from the four big majors?
Let me answer this. If you see your domestic is actually growing, and your domestic demand has been around 12.5 million ton even in March, which is sustaining over last 3 to 4 months. Your domestic story is very robust. In this entire global uncertainty, noise around tariff, 90-day extension, XYZ across non-metal tariffs and everything. I genuinely feel companies like JSW, JSPL, which has a massive, domestic presence, should perform well. In addition to ancillary, raw material companies like MOIL, which basically supports all these ferrous sectors, right? So these names should perform well.
All right. What is the target price you have on MOIL? Because I think that was the one that you initiated coverage a short while back. So your view out there, and if I'm not mistaken, I think you also were quite positive on Lloyd Metal.
Yes.
If you could give us target prices on both those two. And do you think after the pullback, is it a good entry opportunity?
Sure. So my target price for MOIL is around $400, and Lloyd's is over 1,500 rupees. That's a target price. Yes, it's a very good opportunity considering MOIL is like an exclusive or the largest manganese merchant miner in India, and with almost two-thirds getting imported, and they commanding a lion's share, right? And that's the whole story about it with the EC enhancement and the capex going on. So MOIL is a very good level to enter right now. Similarly, Lloyd's. So Lloyd's is also like multiple stories are playing out there, and especially with the MDO business coming in, over next couple of quarters, that would also give a good substantial upside.
Interesting. And the smaller player in there as well, Lloyd Engineering, they are looking at doing a rights issue to help, build that big capacity that they're talking about. So we'll keep an eye on the Lloyd Group companies. A quick question with regard to steel pricing for the industry. Even before the safeguard duty came in there, the prices went up. And then, in fact, you did see that the prices actually, they stabilized. We didn't see another big price increase that came after the safeguard duty. One could say that maybe, in fact, the anticipation was already there. So the price increases were done in advance. What's the price difference right now between, domestic prices as well as landed imported steel?
So if you consider China, I'm considering this 12%, right? So if you consider China, it's close to we are still about 1.5, 2% discount to Chinese landed, and same with your FTA country landed prices. Right now, your domestic is around 50 to 53,000 HRC. So that's almost on par with your landed prices. Considering the 12% safeguard duty, if it, potential safeguard duty in place, right? So that's the entire parity right now.
Okay, all right. Let's move to non-ferrous then. Stocks like Nalco, Hindalco, Vedanta, they have got hit very, very hard. Nalco because of the decline that we've seen in alumina prices. But since Vedanta is not backward integrated, it has a bit of a cushion, right? With regard to lower alumina prices, which will be good for their profitability. What's your view on Vedanta first? Given that alumina prices are down, Q4 could be a little bit weakish, but you have a special situation that is playing out. Your take?
Yes, absolutely. The special situation play out especially in Q1, in my opinion. So Vedanta being a non-integrated player out here, benefits the most at the end of the day. Nalco, on the other hand, if you consider alumina to the aluminium percentage, right, it has cooled off substantially. It is now back to its long-term average, right? So here, Nalco is because Nalco, sells a lot of third-party merchant alumina. Nalco is the last one out of the three, right, at the end of the day. Vedanta, because it's a raw material for them, benefits the most. Hindalco is completely integrated. It's somewhere in between. However, as far as Hindalco is concerned, yesterday there was also this potential tax cut rate in US. If it happens, Novelis would benefit at the end of it. If it happens, right? So Hindalco is also better placed that way.
So among the three, I think Nalco, I guess, going by what you're saying as well, is a bit of an avoid because of the alumina prices are following such a great deal. And we know that Nalco is more play on alumina rather than on aluminium.
Absolutely.
So among the two of them, Vedanta as well as Hindalco, both of them have pulled back a great deal. Vedanta has a special situation. Hindalco has that Novelis trigger, and if things are looking up, then maybe Novelis will not get hit that badly. And also valuation-wise, it looks pretty okay. So your view?
In both, we
Between
have a
the
soft
two.
coverage on Vedanta. Yeah, we have a soft coverage on Vedanta, so we do not have a target price there. But absolutely, Hindalco is better placed out here. Considering domestic play on aluminium, it is supposed to grow, substantially over the next couple of years. And even from the Novelis angle, I feel Hindalco is much better placed.
Hindalco is much better place. And how much of the bad news is in the price for Nalco?
I think it's almost there. Again, it's a soft coverage, so there is no official target price on it, but it's almost at about 140, 145 level. It has come out substantially in line with the cooling of your alumina prices.
Okay,
So
all
what was
right.
going at about 30% of the LME, it is now close to about 14.5% of the LME.
Perfect. Thanks a lot. And I think the long-term average is close to around 17 to 18%, right? Alumina as a percentage.
You could say about 16 to 18% is the long-term average.
Thanks a lot for that, Parthiv. Wishing you a good day ahead. For the time being, Parthiv's view is that he's more positive on ferrous in comparison to non-ferrous. He likes stocks like JSW Steel, JSPL, as well as Lloyd and Moil. While on the non-ferrous side, Hindalco is the stock that he likes quite a bit.